bear and nothing to win, nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Take my hand, I'll take you higher than you've ever been, than you've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. Let's go right into the charts, shall we? Bada bing, bada boom. Here we go to the upside for Bitcoin. So one of the interesting things to note was this reclaiming of the 706 on this diagonal fib, and boom, we went through to the 786 and beyond. I had to add another line onto this fib to just try to see how it would work. This is the 886 level. Are we going up to that 886 on this diagonal fib at 30,700 and beyond? That could be a possibility here, ladies and gents. There is no guarantees in trading, as there are no guarantees in life. So me wanting this to come down to here, I was looking at the external pools of 29.4 and it was just too juicy to deny, and they came straight out from that internal range to the external, and this consolidation of 24 days, essentially this 24 days of accumulating positions to the upside was the play for the long term, and everyone took that. The chickens came home to roost for that consolidation to the upside, that expansion. So what you would naturally like to see after an expansion like that is some sort of retrace. Now, do we retrace similar in this manner? Will we retrace and then expand out further? You have like an expansion, sideways, then retrace, and then back up if you go up. This consolidation was in a diagonal manner. This was about 18 days after this expansion, where we essentially went up in a sideways manner as we traded up from 22k to 24k and back down again, these $2,000 back before we retraced. Could we see some of the same, where it's just a bunch of sideways before we come back into this region ever again? Could this be another sideways, choppiness of this region before we want to come back? No one knows the future, but interesting to look at. Could we see this as a new kind of range here as we reclaim and reposition? Something to note, we may not see this region come back into for some time. There are no guarantees that it will V-shape down. It could V-shape down out of this completely, you never know. Let's go to the liquidity pool, shall we? What is this? This is when people leave their liquidity in the charts to get burnt to a crisp by the market maker for not using a stop loss and leaving it right for the picking. So one thing that we were looking at with these little, they seem so small in comparison, these little bubbles down here, down below, that we were looking at juxtaposing, looking for that perfect entry, and we were so close to getting it. We wanted them to go down before they go up, and we wanted them to make a run on those long stops before they made a rip to the upside, and they just left the longs untouched as they ripped up and continued higher. So one of the interesting things to note is we are at $19 billion in long liquidity below. And those are some mighty big bubbles of 290 million and more at 100x of all things. So there's a lot of 100xers, 50x, 100x, 50x, 50x. Go in detail more here. Let's just, that's 276 million at 28.74, 276 million at 28.43. These are 25x, 25x. It's very stacked in these candles below. So are they going to leave these untouched, or are they leading up to some sort of news play where they come back and eat all of this? I have no idea, but that is ridiculous in terms of how much liquidity is in there. I mean, just straight up hilarious in how much there is. And it's not even the 25x necessarily, it's 100x, plays, 310 at 100x at 29.33. I mean, take your pick, really. These 100x, this guy, let me just zoom in on this one pool down here alone. So this 250, they opened it there, and that that green candle, they came back and took that back, which became the 250 million they re-injected back in. This 310 million and 250 million are still in the charts, particularly this 100x guy down here. This is where you would start looking into fair value gaps and what they mean. And this is the exact meaning of a fair value gap, when they gap the price up and leave that liquidity just resting in the potential for a 29.33 character at 100x of 310 million. Now you could look to the right here and just see all of these noodles, if you will, with no broth in between. Now the shorts just keep opening, which is paving the path to the upside, and this also coincides with the external liquidity. What do I mean by internal and external? Well, when you're just looking at the chop of the sideways motion of this range, which we were getting obsessed with, that was internal liquidity. But we also always kept one eye on the prize at external, so we were looking at 29.4 and higher. We were not foolish in thinking otherwise. So we did see that imbalance to 29.4. We were just hoping to catch it down below. We weren't as precise as we could have been, but we did get that right idea in mind to the upside. So let's go ahead and take a look at the higher time frame, shall we? How y'all doing out there? Is it still loading? What's up? Alright, so let's go to the 7-day. Let's skip the 12-hour. Okay, so on the 7-day time frame, you do have some billions up above on the path up to 32K. You got a couple billion here. Looks like 10 billion on the path to 30,750. On the 7-day, you don't have that much in the immediate time frame on the 7-day, which is interesting to note. So a hit to that region could be in order just based off of that. You do have a slight pool down below at 27,700, but the chances of them gapping down there are slight. Let's look at the $18 billion, starting to see that path paved to the upside here. You got 10, 20, 30 plus 5, let's say 35, 46, 60, 70, 80, 90, 100, about 100 billion up above here on the way to 31.4 on the monthly time frame. That is still paving the way up here, and then the fury in which we went up didn't really leave that much in the charts, even though we are looking at this on the 1 minute time frame, and that is a lot of liquidity at 100x. So are they going to start to make a retrace into this to scare out these 100xers while they start to make aims at the sites that we were looking at before, as they did here? The retrace could be real. There are pools down below here that are still weighing on price. We talked about the popping of the 29.4 balloon region, and they went further into the 30k region of that pool, and so once you offset that, we're also getting more as more shorts enter as we go up. These pools just don't stop ending as we go to the upside. The tether to the upside still continues, which is interesting to note, because back here on March 29th we did not see but $1.5 billion, 2 billion up here at 34. Now we have 9 billion, so you're starting to see these pools thicken as we rise, so they're paving that path to the upside on these higher time frames. Will 30k hold is the question. So we previously saw this imbalance to the upside with, it was upwards of $90 billion, which they came back with the fury to take. It's a shame that I was so dead set on being correct at the runs down here to the longs that I did not follow my own indicator to take this. But the indicator had you, the liquidity had you at hello for this play. I was only human to miss it. So let's go to here. We have the 30,400. So we're starting to see 40 billion at 30,600. And could we see this run up to that region? You just see the liquidity here, even though we had on this 1 minute, it looks like, $10 billion and more. could we skip that and let that just remain paid? That could be a possibility in this bullish scenario. This is kind of new to me in terms of looking at high block as it's happening like this. I've had high block since after January, so I missed the January pump with high block like this. So this is new to me. But yeah, how much of this they would like to take, which is sparse in terms of comparing this 3 month to what is above here, which is 40 billion at 30,006 and 30,008 with just 32 billion and 30 billion at 31 even and 20 billion at 31.2. So these pools are getting thicker above than below, and it's showing no end in sight in terms of the fury. We go up and then they start to pool, so it can push us higher. The lucky campers at 19.4 are still resting easy with their 300 billion plus down here under 20k, and the 22k campers also have their 200 billion or so, and the 25k campers have about 150 billion. So you have all these pools below, but it has a long distance to traverse to get there. But once you start to see these external liquidity pools wane, the weight of the shorts which is pulling you starts to wane as well. And then so does it start to just naturally start to gravitate down into these pools as the narrative shifts in terms of what needs to be cleared out below. On this time frame, it suggests overall that the longs are getting thicker in general than the shorts. Even though you have this immediate thing here to take, do they just keep coming and taking it and ignoring all they're paying down below? I mean, they've come back and left stuff before while they came back to take this stuff. So let's just go back here really quick. I remember this in February. They did leave the gone up just a little bit more, but they had a end point in mind for when they started to retrace back down. So what is the end point? And how much of this goes kind of upwards before it starts to go downwards? Like, the chances of it being V-shaped are few and far between. It could just keep tracing up like this before it goes down, creating a rounded top kind of thing. So this was a pretty furious move to the upside here, and they came and ate all those billions of dollars all the way up to 30,400, leaving 30,600 still intact with 40 billion here. Are they going to come back for it? That is the question. 6 month, let's go take a look. Yo, Rainier, shout out to Rainier, my man, in my partner in crime. So are we going to see some sort of consolidation is what we're looking at? Is it going to continue some of this sideways action before retracing? Is it going to be a while before we come back to these regions? It very well could. Let's look at the 6 month time frame. So the 6 month time frame, we were talking about this 80 billion at 29.4. They came for it as predicted, but sadly we were looking at the pittance down here. I should have been positioning myself into that long on Sunday after I took that mini short. Kicking myself about it now, but it is what it is. There's always another trade. There's always another setup on the horizon. So there is that. So you got, if you just discount all that was here and just look at what is left. Now just look at what is left. What we have left is this, essentially. These are all the pools leading up to 34K. You have upwards of $100 or so billion just above on the way to 34K on the 6 month time frame. And all the pools below you got all of this stuff, hundreds of billions below. So once you start to break these pools and they're not being replenished in the same fashion as all of this, it doesn't matter what nearby pools are around, you might just start to see that spike similar to here. In November, we just started to break down into these pools. Even though there was some up above here, because there was just more down below. So if there's more down below, are they going to just come back into this once they've cleared with the target they came for? I mean, it's what I would do. Like, there's no reason to get set on a narrative. But then when you shift to this one, this is the thing that always blows my mind now when I look at the 1 year time frame. Okay, so you got this 34,877 billion up here from June 4th, 2022, and that is still remaining here at 84 billion now at 34.8, and all of these paths have 70-80 billion dollars on the way up to that region. So the narrative from on the yearly time frame to these regions is 50 billion each way, with some sparse paths in between here and there of 20 billion here and there. But overall, nearing 50 billion per one of these pools. And then if you look below, for some reason, the thing that I don't get is, why do these pools get thinner? The thickest thing you got is this $200 billion camper at 15.2. That is basically the lucky campers that survived that liquidity grab on November 10th. So are they going to leave some of the pools intact on the upside when they start to retrace back down? The one thing that is noteworthy is none of these pools, there's some gaps between these pools they got to fill, and these are previously taken, so they are empty above 27.2. So this entire region it would have to come back down into, other than what we see on this time frame, which is a good $19 billion. So this entire region on the 1 minute time frame contains $19 billion that they could just come back to right now and take. Why aren't they doing that with the 100Xs? I have no idea. I'm not a market maker. I don't know what's on their mind for inducement of shorts and scaring out the maximum amount before they decide to finally drop the other shoe. I had in mind that they would come to 29.4 as my conservative target, and then start to eat back into this liquidity as a retrace idea, because we haven't really seen one since February, and we've been going sideways for some time. But that was a smooth move to the upside. So once again, the narrative of this kind of continuing higher, we do have those pools there on the way up to 34.8. So that is not off the table here on the yearly time frame, and that's just a surprising thing to note. There are pools that are still above that they could keep going into and just not look back. So quite fascinating, really. Let's go into the monthly once again, where it starts to get even Steven, and then we will go to a Fibonacci idea. So it's not even Steven at all. You do have these pools below and the pools above. Let's just zoom in slightly here. Let's go to the 7-day. Let's see what the last day has brought in. God candle coming, is that a possibility? Yeah, I mean, there's still pools up above here in the billions, and they move with such a fury that there are pools in here, but it looks like we've already seen the total of that being 19 billion here. So within this move to the upside is $19 billion. I can total each one of these, or just look at the 1 minute, which accumulates the difference for you. So there's 19 billion beneath us in that entire region, or you can come up into this and see yourself 5, 6, 7, 8, 9, 10, 11. See, the thing is like if you get 19 billion here, they have to pay all those 19 billion to get this 19 billion. So are they out money by moving up to here by paying those guys below, or does it pay them more to eat down into it? And that's the game of this juxtaposition of internal versus external, and not getting stuck in minutia of smaller time frames, but seeing where potential targets and imbalances lie to the upside. That's how we spotted the 19.4 guy over the past few weeks. We were setting it up for so long, and it's a shame that we missed the move as it played out for me personally. I'm sure some of you out there profited from it, so shout out to you guys who managed to get that smooth move to the upside. Congrats. So here we go. Let's see the 6 month. Yeah, that 29.4 juiciness was just right for the taking, that 80 billion. We saw it plain as day. This 80 billion in the charts just chilling there right beneath. There is no reason to go into this at all without taking that first. So now that that's off the table, I like the 6 month time frame personally. It gives me a little bit more color and something to look at in terms of, while we do have these pools above, there is stuff down below to account for in the double digits. So the 6 month time frame seems to be my thing to look at in terms of potential retraces on the longer term. But first you have to get beyond this point, which is full with only $20 billion. Do we inverse Bart Simpson down out of here and just gobble all this up? I mean, those bubbles are mighty thick and on 100x, 50x leverage. So if it were me, I would just say purge the whole idea and be done with it. But I don't know what type of algorithms they run for price restructuring and everything, and what the narrative is in the long term for this. That's a lot of money. So, all right, let's go into the fibs, shall we? Booyah. So this impulse from here to the top here and the retrace to here idea, this projects out a bullish trend-based fib level, which we reached and held that 12-hour candle on, and the last two 12-hour candles have been, or the last 12-hour candle has been from that 0.65 to the 786 region, and we're looking to get permission to come up to the 31,257 to 3370 region. This also coincides with a larger trend-based fib from the bottom at December to February all the way down to March in this rise retrace idea, and we had previously seen resistance on the 1, and then are we going to that 1382 region at 31,864. Let's go look at those levels one more time on here. Oops. $31,257. That's about where 31.2 is about where it starts to thin on this 6 month. Let's go to the yearly where it was starting to get thick on the upside play. $31.2, 40 billion, beyond that 18 and 32 a little bit less. So 31.2 does seem to be a point where it starts to get slightly sparser. If it were to break up from here, that's where you would expect it to go to there and then start to come back down again. But these regions, why do I have these on the trend-based fib? Well, you often get rejected on the 706, or you flag out on these things like this, and then if there's too many longs in here, then you start to fade back into that. If they start to pay themselves, then they can go up to here, but if not, then they start to fade back down into this candle and eat some of this stuff, and then maybe you can see that bounce at the 618 of this range. We already got it pulled for you from this impulse to impulse here, the 618 at 28.8. So they could come back and eat some of this liquidity and see what that would be. And we already know where those gaps are based on the liquidity here, these huge green candles. But the shorts are in shock for sure. Let's go to the S&P and see how that's doing for the day. So we saw as it was opening that it would come back to retrace the candle, and we were seeing if it would drop down. It did the exact opposite of drop, which was rise up, and then did the exact opposite of this, which is come back off of that level. So we were off in terms of the later end of that play. So we had this double bottom idea rise up to this pocket region of these fair value gaps that we had out there. Since when, I don't remember, but we did it on the live. So we put out these fair value gap ideas, and we came back to the fair value gap, and we were starting to consolidate there after the 706 of that retrace pocket region. So in terms of an inducement bottle, we triggered the sell side liquidity, the buy side liquidity rather, and we're starting to come back into this. And yeah, let's look at the dollar real quick. We were saying, could it hold this region? It could not hold that region, and started to break down as Bitcoin pumped, and we're going back into that baseline of this impulse out completely. The dollar is being sold off as it pumps, so there's players cashing out their positions as they pump it right back down to where that pump occurs. So it's not getting legs out of that 618 at all. This is why I removed the pocket on the dollar, because it gave more fidelity as to where it would go back to. So I'm going to put this fib level back, the basic. So are we coming back to the 786 region of the dollar? We'll come back in a moment. Let's throw on our heads up display, shall we? What is this indicator? This is Momentum Master, link in the description. This will tell you certain top and bottom ideas, as well as leading moving average formulas. You can read about it at momentummaster.info. We had a previous rocket ship that started to play out, and then the double bottom formula off of this fair value gap ensue. You got 5 time frames oversold, which started to play out here. Are you getting a shoulder, head and shoulder out of this region? I don't know, but the 4 hour is getting oversold on the dollar, which would suggest a slight pumperoozy for it. You're getting the hourly play as well, perhaps. Let's go back to the S&P with this on. previously had some nukes that played out with the baselines on top, suppressing the price. Came back into the cloud. Cloud started to thin. We came back and kissed that cloud and getting some buyback off of that pressure on the hourly time frame. It's interesting to note, but we're getting that resistance as well on the 706. 14 minutes for this candle to close. In what state? The hourly is overbought here, reaching the end of its road as the cloud starts to turn. We did manage to bounce off of it yesterday in a nice manner. So was that the last hurrah for that buy-side liquidity before we start to see this come back down again? This was a fair value gap recovery. We put the fair value gap in its entirety out. It's not this entire box. You have to go to lower time frames to draw those exactly, and it looks like they're pretty darn accurate in terms of where it stopped the first time and where it continued the second time and into the 706. All right, let's go back to BTC and take a look with the momentum indicators on. We're seeing a pump up now to 30,200. That entire candle getting negated here. Let me remove this real quick. We're getting a recharge off the Keltner channel. What is the Keltner channel? It is an ATR-based Bollinger Band type idea. When you're in extreme bullish territory, you can just bounce off of the outskirts of it. It is kind of like a TDI type thing. So we could see this bounce up here. Let's turn on some liquidations locally. See what type of shorts are opening up here. So you had previously the 100x here that they came back and then they came down into the 100x longs. They didn't really get so many of the 100x longs at all here. They took some of them, but just immediately absorbed that back up and are getting some of the shorts with the fury. Okay, so if we look at the 15-minute, cloud is thinning and we're seeing the London close effect here. So Bitcoin just doing its own thing, chilling at the 786 to 706 region, just eating up all day from Asia to London to New York. Just Asia took it up and then dropped it down for London. London traded it sideways. For New York is trading it also sideways, essentially speaking. Oops. So the ambiguous nature of the 15 needs to come into a region of some nature that makes sense. It's not currently making sense for any type of play. One thing to note is we had a cross down on the hourly event. We previously had that, but immediately got negated here. $40 minutes for this 4-hour to close. How does it close? Does it close above or below this baseline? That's going to be big in terms of a narrative shift for these leading moving average formulas. What are those leading moving average formulas? Looking at momentummaster.info, let's take a look. We are farmers, burn, boom, 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 boom. Greetings, tree farmer. Yo, yo, yo. Those were some nice picks the other day. my friend was impressed mundo with that little rated percent that you shared. So the baselines are what you're looking for in terms of leading moving average formulas when the price starts to get candles start to close beneath it. As price action closes beneath these and begins to cross, downside begins. These are one of the few leading signs of reversal. The scalper's dream. A bunch of people have gotten funded using this strategy alone. Shout out to my guys. I'm trying to get my funding account underway. As soon as I get off the stream, I'm going to go move forward with that some more. I want to get in the funded group with the others. They're trading stocks though, because let's face it, one 5-minute candle of the NASDAQ contains more volume than all the day of Bitcoin combined. So there's more volatility there, and they're profiting from that volatility of these crossover events and baselines getting suppressed. The leading moving average formulas that they imply, letting you catch momentum before everyone else. Hence momentum master. So you got that crossover event, cross up event on the 15 here. So let's look at the 4 hour. One little thing to note is, can it hold that skinny baseline, the first one? So if it closes above that, then you still have that bullish narrative. If it starts to close beneath it, then you start to go back into these ideas. We had previously held this thin boy as we moved up, right? So as that play starts to think about waning, you're also seeing this cumulative time frame volume delta. It's looking across multiple time frame disparity and adding it up into this arrow. You're seeing positions being offloaded here. So to me, this just looks more like a stop hunt to go back into some of that liquidity on the 1 minute that we were talking about. At least come back to the cloud or the Keltner channel on the 4 hour and get back to earth just a little bit would not be a bad thing to think about. And let the alts do their thing. How are the alts doing? You guys have any alts you want me to look at? Also, it's good to let the moves develop and see how they play out. You guys have anything you wanted to share? Let's take a look. Horsing around, whoop whoop. MomentumMaster.info. Wendy, what you doing, Wendy? How you doing? I got a meeting with my boss tomorrow about reducing my hours. So that should be fun. I was up late last night trying to get this funded account linked and everything. It was such a pain in the butt. So I'm trying to get that working. I had to download a virtual machine for Mac that lets me run Windows, and there was all sorts of headaches. So we're nearly at the finish line, and then we can start doing that with our boys at Momentum Master. Hopefully you guys can join too. I'd love to see you doing it, Wendy. You could have fun too. They have an account that you can get for like $30. It's a steal, literally. So you're seeing these cumulative time frame volume delta arrows of selling as we go up here, so it's suggesting that this 786 is a huge resistance point. Also, this candle was a red one, and you're getting overbought on the Williams. These alarming ideas. Yes, you did reset in a bullish manner on the stochastic RSI, but you're getting some bearish divergence on the price action and the RSI here, and the money flow is flowing out as we maintain. So is this money flow flowing out to come back in for a surge up? It could happen. You could get that hidden bullish divergence as we did down here last night. We had hidden bullish, and the funny thing is as we were streaming last Sunday, we saw this hidden bullish, or this bullish on the money flow here, and I should have just switched positions from that nicely into the long. I was hard to believe that 618 would have just held that entire time, no matter how many hits they had to it. And so I just didn't even believe my own indicators here. But if you had just had Momentum Master and just didn't even watch my ideas about it, this was telling you go long, and sure enough, boom. They're pretty spot on. What is that sauce? This is the stochastic array, a never before seen formula which simultaneously monitors more than 7 time frames of information considering over 32 different indicator values. So it can think more than my brain can think, and I think a lot. So it sometimes outsmarts me and tells me the thing, and I even remember saying I'm ignoring this for some reason, which I shouldn't have. So I was just scalping these shorts, and I should have been looking at positioning for that long, even though I knew better. So, all right. Well, do you have anything you'd like me to look? Yeah, fire your boss. Yeah, that's the dream anyway. That's the hope. That's the wish. That's the 2023 goal. Let's do it. And I will hope to take you and yours to the upside alongside me. I'm not in it for myself. I'm in it to bring those around me up as well. That's the goal. So this suppression of the price with the baselines on the hourly plus the 4-hour should see some retrace into the cloud, if not the liquidity alone. It makes sense to me. Let's put some levels out there for some ideas on this now that we've got the euphoria out of our system. So we got the 2933 region for this 310. Particularly I'm looking at the 100x, okay? So the 100x are getting paid 100 times what the margin they put out. So they're getting $1 billion for their return on this 310 million. So this is a key level to me, 2933. That would put you about there. 29333. Let's just do that. Okay. So coming back down into this as a bare minimum to get rid of that little bit of happiness of the 100x here would make sense. And what you do after that is, I don't know, but that also happens to be a fair value gap, so that's a very nice level, and you could spike up around here and continue lower. But you also have 50x and 25x, and this whole region has another 100x pool. So I'm going by just what I see every single day in terms of these bubbles on the 1 minute time frame. So these bubbles are mighty thick. There's another guy down here at 276 at 28.74. We're going to mark that off. 28.74. Is it 874? Wait. 28.743. Okay. 28.743. So that would put you down at the 6-1, just below the 618 region. So if you, I'm going to just put some arrows here, juiciness here, and juiciness here. Okay. So you have these juicy bubbles at 100x leverage down into these candles here. So this also coincides with the 618 retrace idea. So if you're trying to long and you're trying to play it conservative after this play, this would be the regions you would look to find some sort of bounce as they liquidate those longs. Right now what they're doing is trying to induce the idea of a double top, perhaps. We got 29 minutes for that 4-hour candle to close. Baseline suggesting that it's reaching a fatigue point on the hourly time frame. The hourly is once again getting oversold, but you have a lot more things to factor, like the Williams and the higher time frame of the 4-hour, 6-hour, 8-hour, 12-hour, 22-hour. These things are weighing against you now. The move was had. That was a nice play of 10%-ish. So you could come back a little bit and that would not hurt you at all for the continuation to go up to 31.2. It doesn't need to happen overnight. Okay, so this is what we're looking at for the time being. Let's see if that coincides with what the stock market is doing. They're dealing with their whole double top scenarios and fatigue of the baselines as well. You got 3 time frames oversold, the hourly getting overbought here. Interesting that it's getting overbought as the Bitcoin gets oversold on the hourly, and the 4-hour is oversold here where it's overbought on Bitcoin because it never sleeps, so the stochastics are not going to line up. The ES is going to line up more with Bitcoin most likely, this futures data. The futures. So yeah, you got that oversold hourly and the overbought 4-hour on the futures because it doesn't sleep too. So you're seeing this kind of potential here. Previously got to the 1618 of this bullish projection zone. Let's go to the dollar one last time. So the dollar's looking weak because it gave everything back that was pumped into it. So whatever artificial pump was going into the dollar from where, I don't know, it just immediately got sold off at the 618, yeah, the 618 of this fib retracement zone. It could see another pump out from the hourly and 4-hour time frame to try to make an attempt at this shoulder, head and shoulder bottom idea from this previous 886 bounce. The 886 is a weak zone though, it's not really full of strength and vigor, but if somebody was trying to think about a bottom out idea, that's the bottom of the barrel for that anyway. It could just break down out of this because the entire channel is just this entire continuing kind of descending channel vibe. So you could just break down out into the bottom of the barrels of this channel for that double bottom at just that one region as well. Alright, let's see what you guys have to say for something to do. We love the snowman. What's up, snowman? Thank you for stopping on in. Booyah. So I hope you caught the ideas of the liquidity. It's quite thick in these candle regions. These 100x guys should pay themselves. We're just going to reset fresh and just look at it like that move is done. It's in the past. This is where the liquidity is right now as of this moment. You got 19 billion in this region with the noodles looking slurpy, and they're adding more. See, the thing that gives me that idea and that conviction more is this bubble here. You have 105. He opened on this spike up here. So he went long as it was going up. That's not a good idea for anyone. Longs should not be had as you are as a breakout. You should wait to the bottom. And same with this guy here, who they're just coming back to nibble on this 100x of, he's gone actually, I think. Let's just go see that. Yeah, that 91 million is gone. So they came back down and said, thank you for playing. And they just slid his chips off the table. And what that guy did was put 91 million. And it's not one player, it's a pool. So at that 1 minute of time, there was $91 million that opened as we were breaking out here, thinking we were going higher, and they immediately reversed it and said, no thanks, we'll take that money. A Sato type character, you know. So you look at these bubbles and you see which pools are being induced on which side. That is the key. So if you look here, there's 62 million in shorts as opposed to 100 million. So there's 41 million in disparity here in this immediate impulse that precursored the market. It's kind of like a sonar. They ping it, boom, to ping the interest. And the interest is in longing, so it's starting to stack up some long liquidity. So we could come back down into these regions just because the short liquidity is scared and not wanting to enter in as much fury over here on the right. So if you look at these thick bubbles, it's just right for the taking, and it's not even pink, it's red and orange. The red and orange is super hot. That's looking to have get burnt to a crisp and slurp it up, if you ask me, at least down into some of those regions that we were talking about.
Fatality.
So that's my story, and I'm sticking to it for now anyway. And the regions to look at: do we hold this 30,242 region and go beyond up to 31,257, or do we start to retrace down into these other fib levels and below into the retrace of this impulse at the 28,809 level and below at the 6.5 where this other guy is? Today is Wednesday Asian time. It's already become Wednesday, but it's Tuesday. So Tuesday and Wednesday set up to play for the week. Thursday midweek reversal. So do we have a Tuesday, Wednesday retrace, Thursday continuation to the upside with run for profit Friday? I don't know. Know your days of the week. So false move Monday faked out all the shorts, shot us up with the fury. Tuesday has essentially gone sideways thus far. Do we start to see a retrace and then Wednesday continue that retrace and then Thursday reverse out? I don't know. Seems like an idea to me. So once again, I thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and I will catch you on the flip. Peace.